When you heard those comments from Janet Yellen, what was your reaction? Because a lot of people felt it was a little dovish than expected.
Yeah, look, I think they've downgraded their forecast slightly for interest rate expectations before the end of the year, and also as a consequence for next year. So now you can see there's 5 Fed governors that only expect 1 increase this year.
Yeah.
There's still 10 that expect 2 or 3 increases, and I think you can't really get 3 increases this year and remain consistent with that slow increase. So I'd say there's 10 that expect 2 increases, and there's 7 that expect 1 or no increase. So it's still saying most likely 2 increases. I think by September we'll have had another 3 non-farm payrolls. We'll get a good update on how unemployment's tracking and employment.
Yeah.
So our view is still they'll start in September, and if the numbers keep printing all right between then and December, we'll probably get 2 rate rises before the end of the year.
All right, it's one thing for the U.S. economy to be able to handle it. How about the global economy?
Well, that's where the Fed president is saying they will take into account what happens in the rest of the world. So it will be data dependent on the US, but it will also depend on what happens globally once they finally increase interest rates as well.
Most notable, her comments on Greece, that they're monitoring for any possible contagion into the US.
Yeah, well, I guess at the moment the markets are still fairly settled in terms of pricing contagion. There's been a little bit of volatility, of course, as you would expect as these various deadlines get closer and closer. But if you look at pricing, there's not a huge pricing that it's going to spill into some of the other peripheral markets as yet. So you have to, if you're a central bank, you always monitor for everything that could go wrong and what might happen to your economy. So you continue to monitor. That's what every central bank is doing.
And on the other end of the spectrum, as you said, a lot of other central banks are diverging. They're doing the complete opposite. And how effective is that going to be, especially when on the other end of the spectrum, eventually we're going to see a rate rise from the Fed?
Yes, well, I mean, obviously the Fed was the first central bank to be cutting interest rates. It was the one that had the weakest economy earliest, so it diverged from a lot of other places, and then everyone caught up because the US is such an important economy in the world. This divergence has been something we've been broadly living with in a number of different forms for really nearly 10 years, I guess. So I would still say it's a good thing that the US is in a position where they're thinking about putting interest rates up. Yeah. That says the US economy is doing better.
What about the RBA?
The RBA is also in a divergent situation. Yeah. So our economy, it's not terrible. It's just not growing as quickly as the Reserve Bank would like. So they have taken rates down a little bit, twice, obviously, in the first few months of this year. We think they'll stay at 2% for some time now. It is important in their thinking that the Fed does raise rates and hopefully strengthen the US dollar a little bit and therefore weaken the Australian dollar, and therefore the Reserve Bank doesn't need to do anything further in the near term on Australian interest rates.
And very quickly, and I know you're an economist and not an equities guy, but at the end of the day, RBA rates does affect the financial sector, and we saw banks really a lot of volatility in the banks of recent days. How do you think that that's going to impact ultimately how banks and lenders are going to do in Australia?
I think, look, there's been a lot of things affecting bank share prices. There's been restrictions on investor lending that APRA has been putting in place. There's the expectation that APRA will also change some of the change some of the prudential rules as well. So I think they've actually been more significant than the interest rate cuts by the RBA.
Okay, good.